Good evening, everyone. This was a big and busiest day of earnings season. More than 60 of the companies on the S&P 500, including 5 members of the Dow Index, reported their latest quarterly numbers. And then, after the market closed, 2 of the biggest household names in technology came out with solid earnings, Amazon and Microsoft. We begin with Microsoft. The software giant posted earnings of 68 cents a share in its fiscal third quarter, 5 cents more than analyst estimates. It also reported better than expected revenues with more than $20 billion in sales. Shares rose as much as 2% in after-hours trading after rising nearly 0.5% in the regular session to $39.86. Sheila Dharmarajan joins us now with more on Microsoft. So, Sheila, as you looked at all the numbers, what's your one big takeaway?
Well, I have one word for you, and that's the cloud. It's all cloud-tastic. It has been all about the cloud for Microsoft. Really has been making a big push into cloud computing. And under CEO Satya Nadella, it does seem to be paying off. So web-based tools such as Office 365 and its Azure cloud services had big gains of more than 100% sales growth. Now, the Achilles heel for Microsoft is shrinking PC sales, and we did see some impact of it when it comes to the Windows operating systems. For this quarter, though, that was somewhat mitigated thanks to upgrades. But this is an issue that's not going to be going away. It's something the company's going to have to deal with. But in the meantime, the cloud is definitely saving Microsoft.
The cloud is where it is. Now, don't you go anywhere. We're not done with you yet. We're going to come back to you in just a second with news on Amazon. But right now, let's go to Josh Lipton, who's going to take a closer look at Satya Nadella, Microsoft's newly named CEO, and how his strategy for the company is already changing the corporate culture there and exciting shareholders.
Investors have cheered the appointment of Satya Nadella.
Thank you so much.
But can the new CEO keep winning over Wall Street as he implements a new strategic vision for the software giant? Since becoming CEO on February 4th, Microsoft stock is up about 8%. In contrast, the NASDAQ is flat over that same period. Microsoft's investors want change, and Nadella is delivering it. Under Steve Ballmer's leadership, Microsoft's revenue jumped, but the stock dropped more than 30%. Ballmer's critics say he missed the 3 most important tech trends over the last decade: mobile, social, and the cloud. Nadella has stepped into Microsoft's C-suite with a very different strategy and style, often appearing in a t-shirt, jeans, and sneakers. The message: this is a younger, hipper, and more forward-looking company.
I think it's all part of the top-down image that Microsoft's trying to portray as they move to the cloud and become, yet again, ideally, a next-gen technology vendor.
The new CEO is making big strategic bets. He's forcing Microsoft to break away from its PC-centric focus. Microsoft recently announced that Office will be available for the iPad. Users can now go to the Apple App Store and access Word, Excel, and PowerPoint. Analysts say this move could generate up to $5 billion per year for Microsoft. Nadella also talks about a new strategy that emphasizes mobile technology. Tomorrow, Microsoft will complete its acquisition of Nokia. It hopes to boost its very small share of the mobile operating system market. And Nadella is working hard to grow Microsoft's cloud initiatives. That's a relatively small business right now, but one that has enjoyed significant growth.
A lot of the optimism in the stock is related to Nadella's cloud vision, as well as his history in cloud, that he's going to be the guy that enables Microsoft to make that leap.
Nadella still faces serious challenges, navigating a PC market in sharp decline, integrating Nokia and turning that business into a growth vehicle. But analysts have quickly changed their views of the old tech firm, and Nadella is giving Microsoft a fresh face for the future. Josh Lipton, Nightly Business Report, Silicon Valley.
Now we turn to quarterly earnings from Amazon.com. First quarter profit shot up 32%. It earned 23 cents a share. That was right in line with revised Wall Street estimates. Revenue rose to nearly $20 billion. That was a slight beat over forecast and a 23% gain from the same period last year. The stock jumped as much as 3% in after-hours trading. It pulled back after climbing nearly 4% during the regular trading session. Once again, Sheila Dharmarajan joins us. Sheila, the numbers were okay, I guess, but you hear from Jeff Bezos, the CEO of Amazon, a new deal a week.
Right.
So are we supposed to pay attention to those new deals or to these quarterly numbers.
Yeah, you know, it really boils down to whether you believe in his strategy or not. Because let me tell you, he is sticking to his guns. He is really pouring money and pouring cash into expanding Amazon's business, and it's all coming at the expense of profits. In fact, analyst Gene Munster says they are spending money like drunken sailors. Now, look, the idea has been to invest for growth, and right now it does seem to be working. Sales for the quarter did grow more than 20%, and also newer businesses, all these deals that he's been doing, like streaming video services, has grown, and in fact, it tripled the number of views. Now, investors have been giving the strategy the benefit of the doubt. We're going to see how long they can keep going with it, because remember, Amazon did project a negative operating income for the upcoming quarter. That's a little disappointing.
All right, Sheila, thank you very much. Sheila Dhamarajan.